Yeah, okay, mate. So let's look at AV here. Um, you sold at your price there. You're looking to average a bit better, and that's fine. There's no problem trying to get a better price. That's definitely okay. That's on our 125, sitting here right now at 124. Would I still hold even if it dropped to 275? Well, if I did not have a full position yet, then I'm open to it because you can always buy another third of a position or even more potentially. If I had fully allocated myself here, if I put all my position in here and it's dropping to 75, no, I don't want to hold that. Let me just measure it. Um, but it is a little bit safer trying to what is that? It's it's a 40% drop. Of course, that's not good, but you don't want to be losing a 40% drop in your full allocation. Uh, if it drops to 75 from here, I am okay with that currently because I mean I've bought a third here somewhere wherever that price was. It's around maybe it's around the 130 or yeah maybe it's slightly under. I forget now at the moment, but I just know it was down around here. But I know I didn't catch the lows because I was going to bed that night, and then the truth is, it did look like it was going to flush a bit more. Actually, let's look at the daily chart just to kind of look at that. Um, yeah, so I bought at the very bottom of this red candle, and when I see a long red candle like that, I had suspected it was probably going to go lower, but I was like, yeah, I'm okay taking a third of a position here. If it's not the dead lows, it's probably going to go a bit lower because there was a capitulation candle on a 10-minute chart here as well. Let's just look at that from my memory. Yeah, no, so I definitely didn't get the lows. So here's the capitulation at this range here somewhere. The thing is, I was like, yeah, well, there's probably a good chance it could flush below that because the stock market still looked like it could flush, and it did do that. But yeah, so that was overnight. I was up late that night, and yeah, into the next day. I think I had my relatives and stuff like that coming around as well, so it wasn't ideal for myself. But I was okay there, and if I can get a lower position, if we come down stop on here, show some sort of good action, maybe the stock markets are trying to bounce. I may add a little bit early to try and just try and capture the bounce. Now the thing is, what I'm interested in here at this point is the this is a long way down. Yes, we did bounce here, right? We got that bounce, but mostly the whole thing has mostly done that. Okay. Now, if we just look back here, now I'm on Wi-Fi here. For some reason, it's actually really slow. But I'm just saying, if you look at this, you get a bounce, you drop, you get a bounce, sort of bounce. You drop, you get a decent bounce. You drop, you get a decent bounce. You drop, you get probably a 30% retrace. You drop there and you get a decent retrace off that drop, or a big retrace. So every single bounce got a retrace. We have now flushed hard and fast with no bounce whatsoever. It makes me a little bit more comfortable, taking a third of a position here. So the one step, because I've only taken a third of the position, everybody's account's different, everybody's risk management is different, everybody needs to figure out their own risk tolerances and all that sort of stuff. So for me, taking a third of the position, I'm okay if we get a small bounce here and it actually goes lower because of the stock market and does this and forms a bit of a I'd probably be happy to add around the 70 mark if that's the case. Maybe sometimes you do form this after really bad drops. Well, here's a good example actually. So you get a bad drop, but you see this thing here, this sort of falling wedge type pattern. Maybe I didn't even draw it, or maybe it's not a great example, but something like that. But you can see from there, if you had bought into the wedge, well, you're nailing the lows off it, and that's a pretty consistent pattern here of really severe drops. So I'm probably open to that. I probably don't want that maybe, but that's showing way more weakness than I want to anticipate. What my thoughts are on AAVE is that, here's the low. What is the low of the 6 month actually? Yeah, so right there. No, yeah. Okay. So that's interesting. I mean, I'm okay with a stop onto that level, and that's actually your level of 70. Um, I wanted to start averaging in down into the lows of the body of here first, and then I'll build. I'm okay actually with a stop onto this level. In severe crashes that can still recover, you can get stop onto those of the large candle before the proper retrace. So, if I bought here and if I well, it depends on the market action when I will buy again. Um, so I'll just have to keep an eye on it. So yes, on further analysis, I'm okay if it drops into 70. But I have to say that I kind of like this level. Yeah, well, piercing the white 100 here, I do like this level, and I also like it here that we're just piercing, the red and the purple here as well, and it's trying to form a doji. I do like it. It's the problem is it's tricky circumstances. Obviously, with the tariffs, with the stock market crashing, with the bearish yearly stop once, and all of that. But I like this level right here, and I was in here and I was thinking about buying it. I was like, no, 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 and I said in the group even up here, I was like, I'm really tempted to buy some AV, but I'm going to hold out and see if we can buy it here. And it was bad, and we got the opportunity to buy it down here. So let's see how it goes. Now, for yourself, that's a 3-day chart. So this is a 3-day candle here. You could look. You said you want below 125. We don't know exactly how the stock market's going to go. I did say I think it's going to go a bit lower in the stock market, but a fill of here is also interesting, right? If you want to take a small position, that is definitely an interesting place to be looking to buy for some sort of bounce. Even like even a bounce from here, just say that little bounce. I mean, that's a 60 just in there. There's a good trade in that if we could get even some sort of small bounce here. For me, it's a big level. It's a very, very interesting level. So INV, you did ask the question, what's my thoughts on INV here? Very interesting. I've not looked at this in quite a long time. 007 from the group, Jai 007. He did buy and accumulate down in here, and we thought that it was going to bounce. There was a stop onto the range down here, and then price moved down. He got this bounce and he sold into here. And I told him in the group that I think this red 200 is going to be a sell and drop back down to stop on the lows, and that's exactly what happened. And this is still on my chart from back then. It's quite a long time ago. It's last year sometime. Because, and why was I saying that? Because the span of the red 200 down here is too wide. Right? It's too wide. It's not good structure. So bounces into poor structure are going to sell off, and that's what exactly happened. It came right back into my level. Look at that. That's very nice to see it come on there. Which is just below here. The box is supposed to be right there, right there below this level. But anyway, so what I think about it, still poor, still weak. I don't know it fundamentally. I'm just saying because a lot of coins, not even fundamentally, but a lot of coins act very poor, and maybe their team lets the project kind of die in this sort of environment. Maybe the team has made a lot of money from launching the coin, and then they just get disheartened with it. Maybe their technology gets out of fashion. There's new modern technology coming in, kind of pushing them out, and then they feel like they're probably fighting a brick wall, so to speak, because they're wasting their time, and then they might move on to different projects. That can happen in some projects that like meme coins. It can happen in meme coins, and people then they just go and start a new meme coin or something like that. But I'm just saying I don't know anything about this project to say that it should survive. But what I do like about this project technically is that the white and the red 200 are now low on the price, low down into price, that when it's ready, it could eventually sort of recapture this and move off. This is exactly the type of pattern you want for for large explosive moves higher. But obviously, we need the right market conditions, and you need your coin to be enough fees consistently. Probably not making money. So at this point, it is still bearish, right? You can only be bullish above the white 100 on a weekly chart, right? That is very normal. You get a base here. You want to 100. If you're buying below it, you yeah, well, you need to be willing to accumulate, but it's risky because, what if this drops away to zero for some reason or whatever? But as long as you're holding above the white 100 on a weekly, it's awfully, what am I trying to say? It's good action. This tried here and it failed, and now we're stuck below it. So the safe thing for me to say is, you want to see this recapture this and move up, because it's dangerous buying into weakness. Like if you had bought here, it's dangerous buying into the weakness because price keeps dropping. You can be buying here and here and here and here and here, but you're buying into a bearish trend. It's not good. But it's the same as buying here into a bearish trend. I mean, you don't actually know where it's going to stop here. Yes, you can see support, but the safe way to trade is buying into strength, and when it recaptures that white 100. Obviously, the other way to do that is what I preach in the group, over and over and over and over again. You always want to be buying into green candles if you're trying to grow your account. If you're trying to be safe, you want to be trying to buy into green candles. If you're trying to knife catch into red candles, it needs to be a trade. It needs to be, you need to have an invalidation point, and all that stuff. You need to be, no leverage and all the rest, be very safe. But, buying here into a red candle, there's no reason to say that this is just going to stop here. This is still in the bearish market. You can narrow that down and drop this 3-month candle down into a weekly and 2-week. Well, on a 2-week, you could be looking at this on a new 2-week and say, well, okay, in 4 days' time, if I get a bullish stop hunt here, I'll try and buy this. A little bit like here, on a new 2-week, it flips up and gets a bounce or whatever. So that's what you would be looking for. But the reality of it is, this is still red and pretty red, not really deep red or anything, but it's pretty red. Unlikely to be flipping green in the very near future, meaning that you'd be knife catching this here, and it's not very safe to be buying. The reality of it is, this is now deep red on a 6-month chart. So it's a knife catch. It's risky. The safe trade will be on a new, safer trade will be on a new 6-month candle that maybe stop hunts just like it did here. I mean, that is the safe way to tell you, and that's the unfortunate thing about the market. Sometimes it's best to have patience, and you want to try and keep your account intact. You want to buy into the safest positions. So I would probably suggest wait and see if you can get some sort of reaction like this on a new 6-month. That may mean missing the lows here. Right? Sometimes you'll miss the lows because of it. Maybe it'll bounce 50% here, and you miss the lows, and you're like, "Wow, damn! I shouldn't have listened to Marty on that." But I'm just trying to tell you the safe way to do it over a long period of time. That waiting on this will still give an opportunity for a trade, even if you do miss the lows. But over the long term, you will grow your account more, and you will continue to be safer. But at the end of the day, it's up to you if you want to try and knife catch it. That's your call. But yeah, mate, 15-minute video. Didn't mean it to be so long, but yeah, I hope you're well, and I hope the video helps.